All right, let's talk about one of the biggest comeback stories in recent banking history, ICICI Bank. How does a company that was really on the ropes manage to become such a dominant force? Well, it's an absolute masterclass in strategy, and we're going to break down exactly how they pulled it off. So the big question is, how does a bank that's really struggling suddenly become a digital powerhouse? I mean, it's not just that they survived, they started to dominate. And that's the story we're diving into, the how. How did they make such a successful pivot in a ridiculously competitive market? And you really have to understand, this is a night and day difference. If you looked at ICICI Bank a few years back, you'd see a troubled institution, one that had investors pretty worried. Fast forward to today, and they are a bona fide digital banking leader with rock-solid financials. It's a complete 180. So how'd they pull this off? Was it just luck? No way. This was all about a winning playbook. A really clear, disciplined strategy that they executed almost perfectly. So let's crack it open and see what's inside. Okay, so their whole game plan rested on these four big pillars. And look at number one, a digital-first approach. That is not just a buzzword for them. It was the core, the absolute center of their universe. We're not just talking about a shiny new app here. We're talking about rebuilding the entire bank's DNA around technology. Now, this is really smart. A lot of banks just live and die by the interest they make on loans. But that's a risky game, right? It's a roller coaster. ICICI, on the other hand, made a conscious choice to beef up their other income streams. Getting that fee and other income to almost 40%, that makes them so much more stable. They're not just at the mercy of interest rates anymore. Okay, let's talk about a term you need to know, the CASA ratio. What is it? Simply put, it's the cheap money a bank gets from you and me, our current and savings accounts. For a bank, this is like getting your raw materials at a massive discount. The higher your CASA ratio, the lower your cost of funds, and that is a huge competitive edge. All right, so a great playbook is one thing, but you gotta show me the numbers, right? The proof is in the performance. And when you look at ICICI's key metrics, man, it just pops off the page. It's so clear that their strategy is working. Let's start with the big one, profitability. Are they making money for their investors? Well, their return on equity is 16.2%. And just so you know, in the banking world, hitting anything over 15% is considered absolutely top tier. They're not just doing okay, they're excelling. Remember we talked about that cheap funding, the CASA ratio? Well, here it is, 51.4%. That means over half their deposits are that low-cost money. That's a phenomenal, industry-leading number. It's the engine that keeps their costs down and their profits up. It's their secret sauce, right there in plain sight. Now this next one, this is just wild. Their net non-performing assets, basically the percentage of bad loans on their books, is just 0.5%. 0.5%. That is an incredibly clean number. It tells you their lending is super disciplined and their risk management is absolutely on point. And what about efficiency? Are they a lean, mean banking machine? Well, their cost-to-income ratio is down at 45.2%. This is where you see that digital strategy really paying off. Technology isn't just for show. It's making them more efficient, cutting costs, and just running a tighter ship all around. So when you lay it all out like this, I mean, look at that. It's just a sea of excellent. Net MPAs, capital adequacy, CASA, cost to income. It's not just one thing they're doing well. They're firing on all cylinders. This is what a healthy, high-performing bank looks like. It's a testament to the whole strategy coming together perfectly. Okay, so the performance is fantastic. We get it. But as an investor, you're asking, so what, right? Is all this good news already baked into the stock price, or is there still some room to grow? Let's talk valuation and what the future might hold. If we run the numbers through a DCF model, the base case, kind of the most likely scenario, points to a value around 1,420 rupees. But here's where it gets exciting. In a bull case, where they just continue to execute flawlessly, you could be looking at a price closer to 1,680. So yeah, there's definitely a path to some pretty significant upside from here. And it's not just our analysis saying this, the experts are seeing this same thing. The feeling is that their massive investment in tech and customer experience wasn't just a short-term fix. It was a long-term play to position themselves for the next wave of growth in Indian banking. All right, let's put it all together. We've looked at the playbook, we've seen the stellar performance, so what's the final verdict? What's the investment thesis here? So the bull case for ICICI is pretty compelling. You've got clear digital leadership, fantastic asset quality, top-notch profitability, and on top of all that, a management team that has a proven track record of getting things done. These aren't separate points. They all feed into each other to create a really strong foundation. But of course, no investment is a sure thing. You've got to be realistic about the risks. Banking is a cyclical business, so a downturn in the economy would hurt. Interest rates can be unpredictable. And let's not forget, the competition from these smaller, faster fintech companies is absolutely relentless. These are the things you have to keep on your radar. So where do we land? After weighing all the pros and the cons, the analysis comes out with a buy recommendation. The numbers suggest a target price of about 1,445 rupees, which from current levels points to a potential upside of around 16%. And this really brings us to the final crucial question. They've built this incredible digital moat around their business, right? It protects them from the competition. But the world of finance is changing so fast. New challengers are popping up all the time. So the big question is that moat deep and wide enough to win the future of banking? That right there is the multi-billion-dollar question.